my fellow freedom builders, and welcome back to the channel. My name is Hans Nielsen, and as always I'm making these videos to help you get a more solid and stable financial future. The reason for making the video today is this little crisis, this little mini crash that we are seeing in the market right now due to the coronavirus and maybe also due to other factors. But the reason that I'm making it is that I can see a lot of investors, a lot of you guys out there, simply have no idea how to handle when things are going down. And we need to address that because the last many years the market has primarily gone up. And there's this old saying that everybody is a genius in a bull market. And I can see that in many of the Facebook forums that I'm in, where people are pretty sure that they can just buy the dip forever, meaning that a price has gone up, now it's dipping, and they're just buying the dip because of course it will come back and go up again. Well, it might, and they might make money, but right now when the market has dropped, let's say 10% in a few days, people are running around like headless chickens and have absolutely no idea what they should do. And they're asking questions like, I bought this stock 100, now it is at 80, what should I do? What do you think on this? Will it ever come back? I lost all my money, how should I cope with that? We need to address this. And I have a solution, and I'm sorry to say that it is not a solution for those of you already sitting in the market having lost your money. But I have a solution right here. This is called a game plan. In this book, I have written all the rules down that I invest from. Meaning that if somebody asks me, why did you buy this stock? I can tell them exactly why I bought it. Or they ask me, why did you exit that stock? Don't you think it would go up? Well, I had specific rules that I followed, and that is what I'm urging you always here on the channel. Always have a game plan, because then you're never taken by surprise. Of course the market can drop, and it is never nice to see your portfolio, open your computer and looking at all red numbers. That's not nice. But if you have a strict plan that you have tested over time, that you know works on the long run, then you don't panic. And panic is just about the worst thing you can do in this sort of market, because then you're selling right at the bottom and you're buying right at the top. And if you are driven by emotions, then I can guarantee you you're going to lose money. So, what is going to be in such a plan here? Well, first of all, let me just write down a couple of points here. First of all, of course you need to know what kind of market you're in. Where is your expertise? Most of you out there would say that would be the stock market. Great. Maybe a specific, maybe the US stock market or the European stock market. But what I see people doing, I do it a bit myself, but that is because I have a plan behind it. But what I see people doing when the market starts to drop is that they try to hedge. And a hedge is where you try to protect yourself against this loss. So all of a sudden people own stocks and the stock starts to drop, and then they have heard something about something called a put option where you can insure yourself. So they jump from the stock market to the option market. Or they might go into commodities and saying, well, I'll go short oil or long gold, and then they're entering a market where they don't know the dynamics. So what I suggest you do is that you decide on what market, primarily the stock market, maybe ETFs or something like that, and then you stick to that. Then you might be testing some strategies on different markets and back testing them and so on, and that is great. Then you might add extra markets, but don't jump from market to market. That is just making it more likely for you to lose money. Then of course there is the time frame, and this is where a lot of people are making a lot of mistakes, because what they do, I can see a lot of people have been doing this lately. They have been short-term swing trading, which can be great if you know what you're doing. That could be in Tesla, that could be in Virgin Galactic, the space tourist stock, that could be in all sorts of stocks that are really moving. And then they're taking a long position in, let's say, Tesla, and they are buying at a certain point, and all of a sudden it drops. And they had a plan to be in this stock for 2 or 3 or 4 days, but now they're down 30%, let's just say, and then they mentally tell themselves, well, I just make it a long-term investment then. That can be really dangerous. Of course, it might be so that this stock returns to former prices, but it might also just dip to zero. And this shows me that the people saying this, they don't have a plan for what to do when a stock drops. And you need to have that. I'll address that in one of the later points. But shifting time frames, going from short-term to long-term, is really kind of dangerous to your wealth, to your future wealth. Also, on the opposite, if you have a strategy that works on long-term time frames, you tell yourself that you are a long-term value investor, and I'm buying this stock. It is absolutely undervalued, so I'm buying it and I'm planning to hold it for 10 years. And then it goes up 10% in a week, and you're saying, well, then I'll just take a short-term profit. And then you cut the profit, and it goes on going up 10,000% from that. So that is equally dangerous. So you need to stick to the time frame that you had in mind when you entered the trade. That leads us to the entry rules. As I said in the beginning, you need to know why you're entering the trade. I don't care if you're a technical trader or a long-term fundamental investor, but you need to know why you're entering. It should not be because that 20 people on Facebook in a stock group you are in are saying, buy this stock, it is going to the moon, or something like that. You should know from your own plan, why am I entering? One of the reasons here is that if you don't know why you are entering, but just that the others are entering, and they forget to tell you when they exit, then you might still be in the stock while it goes down, and then they went out of the stock with a profit. So you need to have your own rules so that you're in control here. Okay, so the entry rules, that could be a technical setup. It could be moving averages or an indicator doing a certain thing, or it could be some fundamental numbers saying I'm buying stocks that are undervalued in these and these ways, that have PEC scores below 2, paying a rising dividend, having a dividend cover of 2 or 3, or you can put whatever in that works for you and that you have tested. You just need to know why, so that if, for instance, people woke me up one night and saying, why do you own this stock? Well, I might not remember it just right after I woke up, but just looking in my notes, I could tell them, oh, that was because it fulfilled all the point in my game plan. So you need to know that, and of course, equally, you need to know what are the rules for exiting. Are the rules that the stock drops down and hits a stop loss? Maybe you have a stop loss 20% under your current price, or is it that on the fundamental part that they are having a negative earnings surprise 2 quarters in a row? That could be a reason to exit. Is it if they all of a sudden are losing revenue, or that the profit margins are getting smaller, or what should be the criteria for an exit? You need to know that. And the reason you need to know that is that then you don't have to consult all sorts of mysterious gurus on Facebook when you ask people out in the forum, should I sell this now? It's down 20%, and you get 21 people saying yes, of course you should sell it, and 35 saying no, you shouldn't sell it, and it's just a mess. You don't know these people, you don't know their time frames, their exit rules, their entry rules, you don't know anything about them. So stay away from asking on Facebook forums if you should keep a stock or not. You should have your own exit rules. Then you never have to consult these groups again. Not that they're not great, but you should never use them for entry or exit advice. Absolutely not. Then you need to know your risk. How much am I risking with each stock? And if you are a technical analysis, this one can be a bit easier maybe than if you're a fundamental investor. A technical analysis, a technical trader or investor can pretty easily put a level in and saying, if it hits this level, it's not longer interesting for me, and I'll get out. And I risk 20% on the stock, for instance, or 10 or 5%, and this is where I'm getting out. The fundamental part can be a bit harder, especially when you are maybe a value investor and you buy a stock at 100 and it drops to 70. Now, should this be the place where you buy more, or should this be the place where you go out? That depends on your rules, of course. The fundamental investors the value investors they often have the opposite exit rules, because if they're buying at 100 and I think it is worth 150 and it goes up to 150 or 60 or 70, then they exit the stock because now they think it is overvalued and now they want to find another stock that is undervalued. But you need to know these exit rules and define them according to your risk. Also, how much am I risking of my entire portfolio in one stock? Let's say that you're buying a stock at 100. I made a video about this, about risk a while back, but let's say you buy a stock at 100 and it goes down 10% and you put 100% of your money in it. Well, then your portfolio is down 10%. Or even worse, maybe you put all your money in and use the leverage so that you actually put 5 times your money into this one stock and it goes down 10%, then you're down 50% on your entire fund. So what you need to do is you need to come up with a number, and that is best done looking at former history, at back testing. You should come up with a number so that if you can see you're risking 1% before you'll sell a stock, then you should probably not put more than 10 or 20% of your money into this one stock. That means if the stock drops 10%, you would have lost 1 to 2% of your entire portfolio on one stock. I would never recommend going above 1 or 2%. But I know it is a problem for those of you sitting with maybe $100 or $500 to invest and you just wanted to grow very quickly. And that's where you get tempted to put all your money in, put some leverage on and push it into one very volatile stock. And that is simply not a long-term profitable approach. Maybe for 1 or 2. I know that if you look at Facebook, there'll be a ton of people saying that they are making millions or at least many $1,000s each and every year on this. But if they're claiming that, then please ask them for some verified track record of their portfolio. I've never seen someone using huge amount of leverage, jumping in and out of very volatile stocks as their main investment strategy. I've never seen that be a success in the long run. All right. Now, of course, this is all very good, but right now we are sitting in the middle of the mess. We are sitting in the middle of this coronavirus thing, and this is what you call a black swan event. And you can look that up on the internet, but that pretty much describes, it's a metaphor describing a thing that you wouldn't find likely to happen. And it is about a story about at a time where they thought there were only white swans, and they said that black swans were impossible until they found them, and that would be unlikely, but it did happen. And this is a black swan event has become the metaphor, the description for things happening in the market that nobody thought would ever happen. And I remember last year, 2019, when everybody was talking about recession. And what I said to many of my subscribers was, well, I don't believe we'll get a recession right now, because a recession, people have to distinguish, of course, recession and market crash. They are absolutely not the same. But people were talking about recession and market crashes. And I said, the market crash, at least, will only come at a point where no one is talking about it, or at least everybody is certain that we are going in the right direction, because these huge market crashes are often triggered by something we could never have imagined would happen, like black swans. And it was not up until late December, beginning of January, that the first rumors of this coronavirus came, and it was China, and then we thought we had it contained in China, but all of a sudden it is spreading all over the world right now. And this has become a concern. But 6 months ago, no one considered the coronavirus to be the thing that would crash the market. I don't know if it will crash the market, but right now we are at least in a bit of a turmoil because of this. So what are you doing when we're sitting in the middle of a black swan and you don't have a plan? Well, I'm going to give you an advice here, and I know that a lot of people out there will disagree with me. They will tell you just to sit it out. Things will get back to normal, and they very well might become normal again quite quickly. However, my advice to you is this. if you don't have a plan, if you have no clue why you're in the stocks you're in, other than I just want to speculate, things are going wildly, I want to make some money, then you should sell all your stocks. Maybe with a loss. But you should start out with a clean sheet, and then you should define your plan. And if you have questions about this plan stuff, you are very welcome to write me, or I'll make some videos more about how to construct a plan. But you should sell your stocks, because the stocks might come back, but then what would you do? Then you still have no plan. And my idea here, my suggestion is that, of course, if you're in the market with $1 million, I hope you're not right now. If you're in the market with $1 million and you're down $200,000 and it is borrowed money and you can't afford to lose them, of course it is another case, and I'm not a financial advisor, so you should always consult, of course, your own accountant and your own advisors. But if we're talking relatively small funds and you're down with 10% right now and you have no clue why you're in and when you should get out, then get out now and sit down today. Define your plan, read all you can, look at YouTube videos, whatever it takes. Get some education to know what would my favorite plan be, how should I construct it, could I be inspired by others. Here at Building Freedom, I'm trying to give you all the ideas I can on how I do it, but that is not necessarily the right plan for you. So you need to define your own plan that fits your life and your risk profile, and then you can start put money into the market again when this black swan event is over. So if you have no plan, then get out, define your plan, and then you can always get in again. Alright, I hope this made some sort of sense, and I know that there's probably some more specific details about the plan that you would say you forgot this or you forgot that, but these are the main building blocks, and of course there is a million different variables you can put into this. And again, I know that there might be a lot of you out there that are saying people should not get out right now because this is only panic. But yes, my argument is that if you are in the market and have no idea why you are there, then you should not be in there longer than absolutely necessary. And then you should get out, just take your loss, define your plan, and then get in and make your loss back. That's my advice for you. If you haven't done already, subscribe to the channel, hit the like notification and the bell notification and all that down there. And that will tell YouTube that you like this content, and that will inspire and motivate me to keep making even more of that. I'm making 2 or 3 videos per week, and if you haven't done already, remember to jump into the Facebook site. At Facebook you can just find us under Building Freedom, and you can sign up there also to get all of the free stuff we are sending out. That's all for now. I'll talk to you again soon. Take care of your money out there. Bye for now.